Hello, Cheernauts, and welcome to this daily market commentary for Monday, the 5th of August. And what a start to the week we've had. Happy Monday to everybody. The week really has got off to quite an electric start across the board. Crypto has managed to build on its weekend gains as Bitcoin has powered up towards the 11,800 level today. And we've had ETH up to a high of around about 237. We also had Litecoin make some headlines, breaking up through the 100 level, up to around about 107, 108, as mining rewards were halved. Won't go into the details really around that, but essentially there's a finite supply, and as more supply is mined, the miner rewards go down, and obviously there's less to mine, and the price goes up. So that was one of the landmarks was reached today. Bit of a catalyst there. With the broad market having lost around 40% of its value, over 40% of its value from the June highs. This is quite an impressive comeback. Last weekend we had a fairly inexplicable dip in Bitcoin down to about 9,400. ETH went down to just shy of 200. So, this is a pretty good comeback. Probably benefiting from other things going on in other markets at the moment. I think, whether you believe it or not, there's definitely some sort of correlation there, probably with gold a little bit, a bit of a safe haven hedge. I know that might be tough to convince people, but I think there's a bit of that going on, as you'll find out with some of the other things that have happened today. But we do have some significant technical hurdles ahead, which I will touch on briefly in the technical piece at the end. So from the positivity of crypto, we move to the negativity of the rest of the markets. The major focus is now very much the US-China trade dispute, which has weighed on equities much more. China allowed its currency, which is the yuan, to fall to its lowest level against the dollar in more than a decade overnight in retaliation for last week's additional US tariffs. They have also suspended purchases of all US agricultural products. Stocks in Asia all closed down by more than 1.6%. The Hang Seng, the worst of those, down 2.85%. Obviously, they have some of their own issues in Hong Kong at the moment, which probably just exacerbated that move. Prior to the US Open, Dow futures were down by about 350 points. European equities all very deep in the red. Euro probably the main beneficiary against the dollar, running up to a high of 111.70 initially, and cable up to 121.60. Dollar yen had dropped off to a low of 105.80 as risk-off trades were fairly prominent. Although it has to be said, Aussie, Kiwi, and CAD have all weakened in the Asian European sessions, but probably not as much as you might have expected. And gold has been the relief trade. Initially running up to 14.72 in Europe, and then on to 14.80 in the US session. This trend really, the whole trend just continues during the US section. Equities just tanked. There really is no other way of putting it. They tanked. The Dow Jones at its worst was down over 950 points, with the US 10-year yield down below 1.73%. Just a market overbought and very, very nervous of the consequences of this trade war, which just seems to be going from bad to worse. Currency-wise, a little bit subdued. We did get euro continued higher. It did breach 112, went up to about 112.10 before the New York closed, but sterling was fairly happy to trade 20 points either side of 121.5. Aussie and Kiwi CAD, as I said, were a little lower on the day, but did seem fairly subdued. And dollar yen, which you would expect in a market where equities are really falling fast, you would expect to come under a lot of pressure. Really didn't move too far either side of 106 during the US session. It was a little strange, but Asia might the Asian session on Tuesday might see a little bit of a different story. Just before the end of the day, we did see a little bit of a squeeze higher in US stocks. The Dow Jones closing down only, in inverted commas, 767 points, or 2.9% lower The S&P and Nasdaq fared even worse, with the latter down 3.4%. It's messy. There's no other way to look at it. Moving on very quickly to technical picture. I picked a cryptocurrency. I picked Ethereum here just to take a quick look at. We've seen, a pretty good rally. You see here, especially been quite a steady rally. If you go back probably a week or so, up from the 200 level, this is a fairly steady rally up to the high we see today. But the level I'm highlighting here is this somewhere around 237, which we've touched, I guess, very briefly breached and then come back below again. This is obviously going to be the main level of resistance for now, with a little bit sterner resistance at 261. As you saw, we broke through there very sharply on the way down. So keep an eye on this level. I'm not saying it's going to stop the Bitcoin rally, but if Ethereum does struggle to move much higher, it could affect Bitcoin as well. You never know how these crypto markets are going to react. It's only off $5 or $6 from the highs, but obviously needs a bit more momentum to push that through that level for now. And with that, I shall sign off for the day. Like I say, I'm actually doing this quite late on Monday night in the US, and at this point, it is actually a very interesting market, with the Dow futures already down about 600 points from the New York close. So kind of tells the tale of what may lie ahead, but of course that may well change by the time we get together again tomorrow. So I wish you all the best of luck. I hope you had a safe trading day, and we'll talk again tomorrow. Cheers.